problem. Here we are again on the opening bell. We've been open 20 minutes. Today's date is 11/7/2011 and it's 6:50 a.m. and MMTs in the apprenticeship school are learning about the computer generated high frequency model trading and how the platform tells you when they're doing that. But what prior to it coming back down in milliseconds, we went straight up from here, right up there, and made this all-time high. And we hit a value of 0.47, and now it's 0.15, and this has all occurred in 21 minutes. And that the bottom area right in here, it's below these diamonds that go across here. Okay? The thing about it is, once again, you will have to see that once these volatility milliseconds reversals come down, you have to come back up and make another high. And this one happened on the opening bell. And we already have live entries in the options. There, they peaked at 990 and they're pulling back. We finally put a low and the 590 put at 360 based on getting to our target of 599.59. That's the high. We already know that that's a major barrier in the price movement, and that when the equity was marked down during the contagion crisis, that we have made these attempts again, just as we have in the past. The actual price movements that have to qualify is that, once again, just as on that opening bell, you had a computer generated model that ran these up. That's how the diamonds identify it. Then you had them come back down. But listen, even right here where that diamond was, you did make another high. And it all happened in the very opening part of the bell. Because when we pull up the hood, we know where these half bars were during the time frame. And we do know that the diamond support levels now, that we're going into a half an hour opening bell. That's meaning that right now we're about 7 minutes. We're about 23 minutes into the opening bell here, and a lot of it's computer generated. And then there are, out of the total net volume of 300,000 shares, how many of that was high frequency volume versus the public interaction in the buy and sell transaction? And once again, it's having a system that's going to tell you where and why and what has to happen. And that if strength is built in the name to start the calendar Monday off correctly, with the Dow up 58, with the NASI only up, let's say, 580, and we got NASI 100 up 7.23, S&P is up 5.59 handles, right up there to, well, it's up to 1258.82. And the S&P, remember, when I did all the sector indices over the weekend, if you go and look at each and every single one of them, you're going to find a very familiar pattern between the actual net buyer and the net seller within that low of the S&P at 1075 up here. The thing about it is, one of the people in Greece have stepped down. The Italian gentleman, well, they want him to step down. If they do, like I said, the markets will like it. And the thing about it is that you have to pull back into the diamond area like we are. And we talked about this prior to this doing that, but you got to have it. Once again, the qualifier is, if there's going to be a lot of strength, we don't get a red one in here. We go back above these highs. And that the breakout bars again, or that millisecond turn back up in this opening 30-minute bell. We've been open 25 minutes. We're at 84. That represents strength. 0.33, 0.47 was that high. 0.33 on the pullback was this diamond area that we talked about. So we're back above these diamonds. But Bill Merritt knows that the breakout, you had to get above these two diamonds, and you did. And this body here has got to stay above, really now, on the upside. It needs to stay above these two diamonds, Bill. And that your diamonds are putting support in within a 25-minute opening bell that is electronic computer generated buy and sell models and human transaction is people like us buying and selling stocks, options over here on the call, puts over here. We are wholesale. They brought it down to 360. What has to happen though is that this area we want to see where we can maintain for the rest of the day is a closing price above it and a consolidation and break higher, and that we see that the ratio of 0.34 doesn't go to 0.29 like it did right here. No, it has to go higher. It's got to go toward 0.47. So the higher elevation here and the higher elevation here, the more price support that we have, concluding 26 minutes of the opening bell with the opening tape, knowing the principle between the volume here and why option markets are never made on the opening bell. They take time. And once again, MMTs, because this market's very manipulative in nature with a high degree of risk, it's okay to go through the moves like we're doing. And it's okay to understand that it didn't go lower than 750. 810 was the close. That's the ratio low. We talked about in pre-market that that could happen, and it did for now. But as Bill has been asking me is that, well, Mario, that's at 85 and this is at 0.37. It's going that way. And that, yeah, I am above the two diamonds, but in that reversal bar, Bill Merritt knew he had to clear above that two diamond on the way back up during that 27-minute movement, and that this must stay elevated, because if it does, this has got to keep going up. They can't go down to 3-1, because if it does, you're going to fall weak at this diamond resistance right now. And we'll conclude round number 2 of the 27 minutes we've been open between the buyer and the seller and the high frequency volume machines that are involved in the public transaction model in today's market in this year. And that markets have been like that for some time, and the thing about it is eventually with the volume here and this market over here will, really put its colors in. You have 750 to 990, so you have an 810 close to a 990. That's your ratio spread up. And then you're going to pull back throughout the day, and we'll see for the rest of the day how Google will set up and perform. Once again, option markets, understanding the pricing control here, understanding the movement of the equity, but that volume of the equity is how it populates the call side and how it's going to populate this 590 put. And they marked this one down. So when we have the big uptrend, they mark the put down. That's this side of the market. 595 put got marked down, closed at 740, got marked down here toward the lows. Why are the prices holding? Because this 3-minute bar is getting weak. And once again, as Bill Merritt would say, it's getting weaker right here, and he wants it to stay above these two diamonds, and he wants it to consolidate its first 30-minute move between the price print structures that happen here and the volume structures and what's actually involved in the buy and sell tape today on Wall Street.